Okay, we are live. So let me grab the links from YouTube and X and paste it to the LinkedIn event. So this one here, this one there. So okay, YouTube. X. Okay, and I will open a session on the phone as well to see whether it's working correctly. Okay, we're live. Let's start. So I'll lay out the outline of how we are going to do this for the next 1 hour or so. So we'll start with about 5 minutes of introduction and background. So some of you, I think most of you are joining for the first time. So we see testing. Yeah, so most of you are joining for the first time, so you might not know the context. And so 5 minutes for introduction, about 10-15 minutes to go through my positions. That's about 10 of them. About 10 to 15 minutes to have a look at the markets in general, what they are doing. And then about 25 to 30 minutes to go through any assets, or it can be stocks, can be indices, can be forex, crypto, or commodities. Any liquid asset that anyone is interested to have a look, we can have a look, and I can share how I look at that asset. So that's our live for today. At any time, if you have questions, feel free to post to the group chat, and I will be able to see the comments, and I'll reply accordingly. Okay. So let's see. Right. Introduction. I have almost 20 years of experience in the financial markets. I started off with stocks, the indices, then forex, then crypto, then commodities. Yeah, and my approach to the markets is discretionary. I look at the stock price history or asset price history and a very long-term view of it, and form my view of how the market is behaving, and form my view of what's the next big movement, long-term movement. So the input variables to how I make decisions would be price history, volume. It could be useful, but generally I don't care too much about the volume patterns. Yeah, that's all. I don't use technical indicators. I don't use moving averages. I don't use other, various technical analysis indicators as well. Yeah, I just look at the chart, draw a couple of lines which I think are the most important, then infer what's going to happen. Yeah. So last year I made 22 positions, and out of the 22 across stocks, indices, forex, crypto, and commodities, 21 are profitable. Only one is losing, but I think it might become profitable this year. And this year, so far, I think I only made one investment, soybean oil. Yeah, because my position is already assembled last year, so I see no point to change to something else. But soybean oil is something that a couple of weeks ago it's quite clear that it's like very likely to go up substantially. So I make a long position in it. All right. What else? In the institutional space, you have most funds and buy side, sell side, or hedge funds. They are usually using the quantitative or discretionary approach, because that is the approach where you get to keep the IP of the method, right? When you have the PhD and the specialists develop a model, when those people leave, the company gets to keep and retain IP. But for a discretionary approach, you can't actually keep that risk profit profile. When the portfolio manager or trader leaves, his performance type profile would leave together with the firm. So I think that is why predominantly you don't see a lot of discretionary portfolio manager and traders as compared to quantitative and systematic. Yeah. All right, so let's have a look at my positions. Maybe first one, Deutsche Bank. So I was in a hiatus for a couple of years. Let me see whether this. So. All right, so let's have a look at. So the voice is coming through. All right, so I was in a hiatus for a couple of years, and in 2022. I made a big long position in Deutsche Bank shares. So I'll share my screen now. Okay, so in 2022, let me switch off the unnecessary stuff. What did I see in 2022? So this is a very long-term price chart of Deutsche Bank, like almost 30 years. So you can see that this line is the most important line back in 2022. You hit and bounce, hit and bounce, hit and bounce, something like that. Hit and bounce, and then the price go under, then go through, hit, and then bounce up again. So this period was a sort of uncertainty in the market where it's in quite a bad situation in the company. So then sometime in 2020, it went up, and that's the indication from market that the worst is over and the trend has now turned upwards. But I bought somewhere here in 2022. Somewhere here, yeah, at this candle, yeah. So I bought it here because it's clear to me that price has now turned upwards, and at the time when I draw the line, I think it's something like that, yeah, something like that. So I wasn't really sure whether I can get it any cheaper, but it was clear to me that the direction has turned upwards, so I'm very comfortable to long. And given that it's such a large chart shape taking like many number of years to form, I think the chances of being wrong is very, very slim. So I long and I took a large position. Even to this day, that position is making 60% gain over 2 years, 60, 70 around there. So you get about 30% return a year. So even until today, that is still my largest position on my portfolio at 30% on my portfolio. So it shows how much conviction I have in this trade. So it went up, and then you had the Silicon Valley Bank crisis and the banking crisis. It dropped down and then it went up again. Yeah, so it's here now. So I think it's doing fine. How I will look at the chart would be something like that. So I think that compared to 2 years back, where the line I drew earlier was the most important line, I think that the most important line now is this one. Because looking at the top line, I can see a lot of interactions and gyrations with a price with this line. Right? Look here, it spans all the way back to 1999. And if I draw another line that's parallel to the top line, it touches here, it touches here as well, and it sort of touches here. And you can see the price actually went up and came back to test it, and it had a successful test, at least for now. So I think that look, it has a successful test. Of course, price can always like you turn back and drop down, but as of this month end close is a good formation right now. And where it might go, right? So if you look at the top line, since it's a line which has so many interactions, what's might happen is if price does go here, somewhere here, then you might see a lot of sellers coming into the market. You might see a lot of people coming into short. So I think given that I bought around 10 euros, I think if it does reach 25 euros, I'll be more than happy to exit the position. Not so much of saying that you can't go up more to test here or break the old high at around 90. But it's more of I think that by exiting here, I would have gotten a fair and reasonable reward for the risk that I've taken. So I'm very happy to exit all my long position somewhere here. Okay, so far so good, right? So another one that I'm holding is a FTSE 100. So looking at a very long-term chart of FTSE 100, let me erase this line first. Right, this is like a 30-year chart of FTSE 100, 35-year. It's moving in a very clear manner. And the longer term you go, the less noise you see on the chart, on the price history, because all the random events are not significant. It won't really show up in the chart. Like you can have big players having different views. It might show up as some bull bear fight on the chart, on the weekly chart, on the daily chart, on the small time scale. But on the monthly chart of this duration, those are not going to be visible, right? We have been smoothed out. So if you look at here, it's quite clear that to me that these are the two lines that's important, and this is the most important line right now, right? And if you draw a line from here to here, you clone this line parallel to the bottom, you see that it touches very nicely these 2 points here and here and here. And if you draw clone another line to the top, that might be where is eventual price potential, in the sense that people who follow price projection, they might measure what could be a reasonable price. And if price does hit 15,000, then people might come into short or big profits. Yeah, if it does go there, I'll see how the price behave on a week to week, month to month basis to see whether it's worth holding it. Yeah, it might just cross it and do a fake breakout and then go on the reverse. Yeah, if it does get there, right? And when I bought it sometime here. Yeah, 7,450 last year. So why I bought it? Because it's quite clear that it's bullish to me. And I've already have a long view on FTSE 100 since right here. I can show you why. So if I draw a line, can you see that this line this is a Willy chart, by the way. Can you see that price gets supported all the way, all the way, all the way? Then it loses this. This was when there was the previous Prime Minister of UK, Liz Truss, and I think the market wasn't very happy with her being a Prime Minister. So, and then Rishi Sunak took over, and then the market reversed back. So to me, at this point, it's already clear that the direction of FTSE 100 is up. The path of least resistance is now up. It's no longer down. And incidentally, on the lowest point on FTSE 100, I was making a post on LinkedIn at the time that this might be the bottom for FTSE. And I think Bill Ackman commented as well. He was, I think he bought a lot at that low. And why it was clear, I mean, sometimes market move in extremes like here. It's like it's dropping all the way to a low 10 years ago, you know. It's like it's so extreme that there'll be a lot of people that know that that's the bottom because it's just too extreme. Yeah, that was what that was a pandemic. Yeah, pandemic crash. Yeah. Incidentally, a few months back, I think 6 months before that, I made a post as well to say that the market is topping. Because I can see from the price action of Dow Jones Industrial Index that it looks to be positioning up for a crash. Yeah. So I made a post about that. Yeah. Anyway, the real story was the COVID pandemic crash. Yeah. The reason always come out later to the headlines of the press and media, but the price action would precede the news in the headlines. At least that's what I believe generally, and that is something that works for me. Another line that is important to me now would be this one. So if I draw this line, can you see that there's a lot of interactions with the last 20 over years? There's a lot of interactions with this line. And then what happens? Price is sort of crossing it and testing it, right? That means that suggests to me something big is going to happen very soon with FTSE in the next 3 months. Either you lose this line and you have a quite bad crash, or you test this line successfully, which so far it is successful so far, and then you have a strong markup here. Because this is such an important line right now that, you know, failing to capture it will lead to people exiting the position, exiting longs and taking up shorts. And a successful capture of this line will mean the direction is clearly up. And overall, I think I'm leaning on the bull side because FTSE is testing all-time highs, but it's still holding on to the gains without even hitting the old highs here, formed in 2023. So it just suggests to me that the market in general is bullish and the bulls are in control. So I'm still holding on to my long. Okay. What else? Moderna. So Moderna, the primary feature of the chart shape is this. You have two expanding shape, which to me means that the price is not clear. The market is not clear which direction to go. And when you have a big drop from $500 to $100, and you have uncertainty, it means that it's forming a bottom. So I long somewhere here where it seems that there's a problem hitting the bottom line along here. Then it started to U-turn down. But being a investment bank employee, I can't close a position within 30 days of buying it. So by the time it has 30 days past, it's dropped a lot. So maybe no point to cut. Otherwise, maybe right after, it's probably makes sense to cut it. Yeah, get a small loss. But anyway, it went down somewhere here, tested the old high somewhere here. You can see very clearly that it was testing the consolidation period here. And on the day of its low, it was clear to me that that's probably the bottom, this one. Because why? This is a fairly known company. And for it to drop 20% on the profit warning, with the issue of profit warning. Well, you drop 20% in the day. That's too extreme. So I thought that must be the low. Yeah. But of course, I didn't buy more. I'm not a fan of adding to position. When you drop more, you buy more, you drop more, and buy more. At some point, you hit on a losing trade and your account can go bust. Yeah. I'm also not a fan of adding to winning positions because your small profit can end up becoming a loss instead of becoming break-even. So why do that? Now, what's the primary feature now for this chart? So what's clear to me now is I think this is also an important line. This is probably the most important line right now. So you try to capture this center divider. This line is actually between the two lines. Try to capture this. Then it drops down. So, if somebody is an active trader, probably you want to take profit here. So this would have been a profitable trade. Yeah, but I'm taking a more longer term view. So to me, it's still all right. I don't think it's that clear cut that it has reached its potential top. Looking at the monthly chart, it's not a clear failure to capture that middle line. So I'm still holding it. And you might start to find some support here. Yeah, which is incidentally, you can see that it's parallel to the top line, right? It's parallel to the top line here. Yeah, it might start to find a support here. Sometimes you have important lines, price gyrate up and down, and you wipe out all the bulls and bears on both sides who are short-term traders. Because they cross a buy, and they drop down, they cut, and repeat, right? But if you are a longer-term position, maybe you don't really care. Up and down, you don't really care. Right? You just exit when it doesn't move in a way that is bullish. Yeah, so far it's still okay to me. So I'm still holding it. Okay. I have a lot of commodities positions now because in November Q4 2023, it was clear to me that commodities as an asset class is quite underpriced. The market is wrong. So I built a basket of long positions in gold, coffee, sugar, copper, and I already have oil since last year March. So I'm holding 5 commodities positions now, plus the recent one which I've bought, soybean oil. Okay. What do I think of crypto in 2025? Oh, okay. That asks an interesting question. Okay, let's cover that. So let me quickly go through the commodities position. Then we'll open up to looking at the different asset classes. The first one being the question on crypto. Okay, so this is my plot of oil, crude oil. If you see the downward sloping lines, they are like the downward channel. And then you have the upward sloping lines, they are the upward channel. So you have the downward channel with the center divider. You have the upward channel with the channel divider. And when did I buy oil? I bought it here. Where let's zoom into the weekly chart. I bought it here, right at the low. Why? Why am I so sure that it's a low? Why can't it drop and then turn out very badly? Why am I so sure I'm going to buy and I'm willing to buy on the way down? It's because you can see here as it comes down. I mean, maybe I can explain, but it might not be that straightforward for you to see because I've seen prices for like almost 20 years. I made like over 1,000 trades. I used to do day trading and swing trading. But I stopped because it's just generally hard and not so profitable, highly profitable for retailer because the shorter term time frame you go to, you're competing with the large banks and the hedge funds, and they have the tools, the hardware, the talent, and the processes in place. That's quite hard to beat them. There are people who are very successful swing traders full time. That's fine, but day trading, I think, is quite hard. Yeah. Okay, so it's over here. What happens is that it's quite clear to me the market is respecting the upward channel instead of the down channel. You see, there's a tendency for price, and this might be interesting to one of the attendees here because I saw his profile. He's working in the energy, oil, biodiesel space. He's a CEO of one of the company. Yeah, so it might be interesting. So here, there's a tendency for price to sort of respect this line versus this line, where the upper line is a channel divider for the uptrend channel, bottom line is a channel divider for the bottom channel. So when that happens, it's clear to me that the bulls are in control now, and the trend of oil has gone up to be up. And it go up and down. Yeah, but I think I posted recently a few weeks back that I think the price of oil has bottomed. And can you see that now it's starting to break away from the bottom line? Hit, jump up, hit at a not so close, and now it's going up before hitting it, right? It's quite clear that the bulls have taken over control. They're gonna push it up here or more. I don't know how far you can go, but the bulls have taken over control. It's quite clear to me. So I'm still holding a long. I think it's about 30+% gain. I got the 2x exposure. Gold. So gold was going sideways for 3 years. I was very hesitant to long it when it started to break the historical high. I think it's somewhere here. So here, people are talking about it, but I don't want to long it because it's such a closely watched commodity that I don't believe the first attempt to try to break will be successful. So I don't want to be caught in the crossfire. So I didn't enter. But when the first attempt to break historical high failed and price has demand, that's where I enter. So I bought somewhere, can't remember, somewhere here, I guess. Yeah. So it's gone up like, I don't know, I got 2x exposure. Probably 20-30% gain on the 2x exposure. I can't get a 3x exposure on gold because it moves very slowly. So you lose by the time decay and the whatever. Yeah, so not time decay. I got an exchange traded commodity, but for the 2x exposure, they will charge management fee, whatever, leverage fee or what. Yeah. So over time, if your position goes sideways, your position will lose money, right? So I can get a 3x. I think it doesn't move as fast to take a 3x. Coffee. Yeah, as of now, price movement looks all right. Consolidating, it's very nice. It's a very nice bull flag, right? Break a new high, historical high, consolidate sideways, not testing it. It's a very nice shape. Yeah. Clearly, buyers are in control for now. Coffee. Where did I buy it? I bought it somewhere here. So this is a long-term chart of coffee. To me, it's not a convincing top. So I do not think these are the eventual top for coffee. And particularly, look at here. You have a few monthly, spend a few months here. You spend a lot of months here. So it's trying to tell me that this is an area, a line that is going to break. Because for price to go up so high and consolidate nicely in a quite a fairly tight range for many months, it means that it is bullish. And then this movement is just a flushing out of the long positions, in my view. So when you have this thing, to me, it's very bullish. So I bought somewhere here. And this high, I got a 3x ETC. It was making 200% gain. Yeah, so the value of what I bought became 3 times. Now it's dropped back a bit, but to me it's still bullish because look, it's closing above this line. But if price go down next month and maybe close down, then maybe I'm wrong. Then I need to take profit. Otherwise, I think it's reasonable to expect an attempt to try to hit this line. Yeah, so that's coffee. Let's look at copper. So it's still bullish here in my view. So copper. So this is a long-term plot of copper. So you have a price trying to break this line, fail, then you have bear market, then you have price trying to break this line, fail, you have a bull market. And price trying to hit the previous breakdown level, but price is not dropping down here, right? There's demand, there's support. And if you try to draw a channel divider somewhere here, you can see there's a lot of bull bear fight going here. But to me, the presence of having a bull bear fight here, instead of dropping straight to hit this line, is already bullish. Because a normal price movement, when you try to hit a previous breakdown level, is if it's a bearish long-term trend, bearish nature, you're going to drop hard and fast, not deliberately going sideways. To me, that is just flushing out the long positions to prepare for a move up. So I long. Where did I long? I long here. Then it went up quite a bit, I think 20-30%, and my 3x exposure make 100% gain somewhere here. Then it entered the headlines, and then it dropped down. Headlines of a short squeeze in copper, then it dropped down. If you look at the weekly plot, it's a failed breakout, but if you look at the monthly plot, I think it still looks all right. So I'm still holding the long. Yeah, to see whether there's a forming of a base here to try to attack the upside again. Yeah, so that's copper. Maybe have a look at sugar. Sugar is my only losing trade last year. I'm still holding. Sugar. I had to buy sugar because I was building a basket and I can't afford to lose not having sugar. I got into commodities because I saw that cocoa was having a great run. And to me, if I was following the market, I would have long in January 2023. But I didn't notice cocoa until this September, July or September. Yeah, by then it was too late. It has gone up like 50%. It was already too late. Yeah, to me, I could risk losing 30-40% if I try to long it at that time. Okay, so I bought sugar here, and again, I can't really cut. I mean, because in an investment bank, it's not supposed to trade frequently or whatever. If I cut and then it goes up and buy again, clients might ask me, why am I doing that? Why did I close it and then the next day I buy again? So I just keep on holding. But recently I made a post on LinkedIn that I think it has found its bottom. It's probably going to go up, try to attack the upside again. Yeah. And the reason being, sugar doesn't really, price breakout it doesn't really stay a long time, many months in the false range. Look here, 1, 2, 3, 4, 5. You know, at most you stay 3, 4 months of a false break. But you're staying here like oh my god, more than a year. You're staying here more than a year above this line. So it's very hard for me to believe that it's a false breakout. The chances of a false breakout is very, very low. Because if it's a false break and the smart market participants, the insiders, people close to the industry, they can tell that it's overvalued and they would sell and short. But no, price is still holding on fine after a remarkable bull run, right, since the pandemic low. So it's going to go up, in my view. Right, soybean oil, I think that's the last one. Sorry, ZLF. Is that the last one? I think so. A copper, gold, sugar, oil, coffee. Yeah, that's the last one. Okay. After this, let's look at the questions. Okay, soybean oil. This is like the long-term price movement, in my view, for the last 20 over years. So you have a failed break and then test the line and then you drop, you know, failed break and then a small rally, and then you have big failed break and a big rally. You test the previous breakdown line and then price drop down. So from pandemic low, the price went up from like 26 to all the way to 90. And then it dropped back all the way to 45, less than 45. So lost half of those its value. And now it's touching the line where it had a failed breakdown. So to me, that's a reasonable buy point. So I just have to buy this. I just have to open a long in it. And also, if you look at the midterm like weekly chart, you can see the price actually tried to break down of this line, but it doesn't. It quickly got back. So I bought it here. So I think somewhere here or here, I can't remember. But it's at a small gain now, but it's still all right. Yeah. And I just bought a one-time exposure because the movement for soybean oil is pretty slow. Yeah. So it might take a few years to materialize. And I won't be surprised that you at least hit the central channel divider somewhere here. So I won't be surprised that the price would try to make an attempt to hit this line, 67. So if it does hit 67, I've already made 50% gain. So let's say it takes 2 years. Oh, no, it's just 1 year. Okay, so let's say it take 1 year, I make 50% gain, then it's very good already, right? But let's say, there's some gyration, the force breakdown and break out again. Given there is a large breakdown structure, you might do a fake breakdown here again and go up. Let's say it takes longer. It takes 2 years. If 2 years I can make 50% gain, it's already very good because it's almost 25% gain in a year. So that's like it's like a no-brainer to me. I'll just have to buy it. Okay. Right. So crypto. Okay. Right. So Zai is asking about what do I think of crypto in next year. Okay. So since we're talking about crypto, I've never lost a crypto trade before. I started my first trade in 2018 December. I posted on LinkedIn to say that I think Bitcoin has bottomed. It was around 3,000-4,000. I make a long. That was my first trade. Yeah, that's my chart for Ethereum. So I long Ethereum here last year. Somewhere here, I think. Yeah. Because it is doing a failed breakdown. So but this is not the lines that were important then are not important now. But yeah, but it's okay. I don't want to digress too much. So I make a long somewhere here, and then it's go up 10% down, and then sort of go up again and non-stop. And I exited somewhere here. Where was that? Somewhere here. I exited somewhere here on the way up because I can feel that the price movement are bearish in general. Why? Look at the 4-hourly plot for Ethereum. We don't have price data anymore. Okay. It's okay. You can look at my previous month market review. At that point, there's a 4-hourly data. So what happens? I'm not sure whether I can still draw that, but let's see. Yeah. Maybe I draw it on the daily plot. So look here. These two lines, the upper line and this line, your price hit, then come back all the way down. Price hit this line, come all the way down. Price hit this line, come back all the way down. Then price goes up. To me, that's a bearish movement. When you have a movement that keep going all the way back to where it started, it means that the buyers are not that convinced that it's going to go up in the long term. The sellers are aggressively shorting and selling because they think it's overvalued. And on the way up, there's a lot of bull bear fights along the way up, which I felt like people are, are fearful and they want to exit the position. And given that I'm not a full-time trader, I have to sell when I can. And now when market suddenly U-turn back sharply, and I'll be working, right? How am I going to sell? So one evening I saw that, okay, it's going on the way up. I think I'm not sure whether it'll go up much more, so I just sell. Then it went up more. You see, the amount of bull bear fights is a lot. You sell down and break out, and then you have a failed breakout, and then you sell down again. And that was the top for Ethereum. It never crossed there again so far. So I was posting somewhere here on the LinkedIn on this candle. Yeah, on this candle. I was saying that I think this is a reasonable point to short. Well, I can't short because I'm working in an investment bank, right? Yeah, I already tendered just a few more weeks, just a 3-month notice. So that's a reasonable point to short, and I will have short if I'm not constrained. But the only way to get short exposure would be something like a CFD, but the bank can't allow derivatives and CFD contract for difference, so I can't short. Anyway, then it went down 20%. I posted as well when I cut a cover for the 20% gain. Then somewhere when it hit this line again, I was commenting on that post that that's a reasonable point to short. And then it went down 10% again. Yeah. So where do I see crypto going? I don't think it's doing well, to be honest. Look at this shape. Well, I'll go to Bitcoin right after this. You have a strong selling here. You have a break through this line, and then price immediately hit here. I will be really not surprised at all if in July and August, when price start to trade below this line, it's going to be really bad for the bulls. It's going to be really bad for the bear. Really good for the bears. Price, the weakness continue. It cannot even project how much it will drop. Yeah. So it might be as bad as taking out the low form here, like all the way and hit here, right? From 2000, it was around 3000 where I think it's a fair to short. You might all the way here. You might lose like more than 60-70% of its value. Yeah. So I think it could be really bad. Yeah. But who knows? Yeah. Let's look at Bitcoin. See any other questions? So far, there's only one question. Okay, great. Then we have time to cover. Same for Bitcoin. So I long Bitcoin last year as well. Where did I long? Let's delete this line. I long it here. Somewhere here. Why? Because to me, these three lines are the predominant lines for Bitcoin. And over here, you have a failed breakdown. Price went down, close below, and then you break out again. So when you have a weakness back, you try to grab it as cheap as possible. So I bought somewhere here. It went up, took profit here because I still don't believe that was the low. I don't believe that's the final low. Why? Because look here, there was a low in 8 weeks. 8 weeks of price crawling on the ground. That's hardly a low to me. When you have a real low, typically you see a lot of buyers buying up the asset. You see a lot of sellers sort of closing their positions if it's a real low. I don't think there's a real low. There's too much weakness here to believe that is the low for Bitcoin for this down cycle. So I don't think that's a low, but never argue with the price. So it went up, so I long. Sold here to profit, and then I swapped to Ethereum somewhere here before it did the takeoff. And then you look at Bitcoin. What's interesting is, can you see that given that all these lines are the predominant lines, what's happening now is that price is being constrained and held back even before hitting the obvious upper line. That means that the participants, the smart traders or whatever, in the market is saying that, hey, there's an obvious price target of 84,000 USD. But I'm going to start selling before that because I think it's bearish. So I'm not going to wait until the obvious price estimate to sell. I'm going to sell before others sell. And that's what's happening here. I think it's being stopped here. And it's not hitting the obvious price target. There's a lot. That means there's a distribution. You have the institutions probably. Maybe shoot the full-time traders, investor, whoever, selling to the retailers, right? Retailers may be thinking, oh, all-time high, let's chase. It's going to go up to 100,000, 200,000, whatever. Right? We have all these stories, and then retailers come in to buy, fear of missing out, right? And you have all the insiders selling, and more selling. I will buy here. I mean, of course, it can eventually go up or not. Hit here, can go up. But the thing about how I look at markets is that because the way I approach the markets is I look at multi-asset, and my approach works for multi-asset. Like I mentioned, 21 out of 22 winning, and including some of those paper short positions this year, it will be 26 out of 27 winning across multi-asset classes. So if somebody is in a position where you can sort of reliably make money from different asset classes, then you will find it very hard for that person to be constrained to just looking at the particular asset class, whether it's stocks, index, forex, or crypto or commodities. So to me, when I look at this, when it's obviously clear to me that the selling, and I'm more comfortable to short than long right now, but I still won't because it can be still tricky. I believe that Bitcoin might go through a period of hard to make money for bulls and bears. So I won't even try to have a position in it. I won't short it. I won't long it now. I mean, at this price, I won't short lah, but in March at that higher level, I'm comfortable to short. And recently, when Ethereum hit 3,000 again, I'm happy to short, but I can't because of certain constraints. Yeah. So when I look at this, between choosing a short or long position right now, or say let's say long position, I would rather put the capital to work in buying soybean oil because it's clearly to me underpriced and the market has priced it wrongly, which I believe it can make substantial gain. Of course, the gain is not going to be like Bitcoin, like maybe it can go up like 200K, 300K. I don't know. But the gain is more, I think the risk of being wrong on that trade is low. So I would rather long that rather than buy Bitcoin or short Bitcoin now at this level. I think it's has a more tendency to go to the downside. Let's look at Solana. Look, that's a plot of Solana. Very nice. It's like textbook example, man. Look here, you have to break. These are quite nice uptrend channel. It's all very neat and clean. You have field break, go down. Here you test the previous field break, you go up, and then you lose this important line, you go down a lot, and then you have field break and then field break and then you go up, and then now what are you seeing here? We have a field break here, field breakout, you know. So chances of it going down substantially, it's more than 50%, I would think. But still, with crypto, it's tricky because arguably you can also say that price mark up so much and it's still holding quite steady here. So it could be inferred as bullish as well. But I will be more comfortable to short than long it. Let's say somewhere here when it breaks this line, or when it initially break the line, I'll be comfortable to short it. Yeah, but sometimes like that, if you short and then after some time the price doesn't go down, then you have to be careful and question your hypothesis whether your view is right or wrong. Yeah, but that's so in general, I can't comment what crypto will be like in 2025, but I can comment that for the rest of the year, chances are you probably see further price weakness. Because let's say it does drop here. So by the time you are looking at 2025, right, you'll be somewhere here. Let's say it does drop here. So then you have to see whether this line is supporting price well. Or it loses the line, then you're probably looking at a huge big move down. If it does support well, then what you might be building up will be a story of a sort of inverse head and shoulder. You have a inverse shoulder, inverse head, and a very nice, quite nice inverse shoulder here. And then you have a nice breakout later. But I'm still quite cautious because the low here that I mentioned earlier, it just doesn't feel like the real low. I feel like that low has to be taken out first to kill all the bulls. Yeah. Still holding it. That are not like fully convinced bulls, right? And leverage positions. If you drop Bitcoin drop to let's say 13,000, let's say 15,000, right? Such a big drop probably would have killed many of the bulls. Then maybe it's a good bottom to long. Yeah, but it's hard to say, right? You might have a nice consolidation, still break out, right? I mean, although I've never lost a crypto trade, although I have very high hit rate where what I buy, what I short, before I joined the bank, are generally very likely to be right. I can still be wrong. Yeah, although I have a predominantly bearish view of crypto, I could still be wrong. But that's all right, because for me, I don't have to buy crypto or trade crypto. I can trade the other stuff. I can buy soybean oil and other things, which are, I mean, the other position I'm holding, like the various commodities, Deutsche Bank shares, FTSE, they're all clearing direction that the crypto to me. Okay, so yeah, so it can play out in different paths, I think, for crypto. Yeah, but I have a bearish bias for it. Let me have a look at whether there are other questions from the other platforms. So let's see YouTube. Okay, great. YouTube, there's no questions. Let's check. Let's check X. I don't think there's any question at X. Yeah, those. I don't think so. So, yeah, I think we covered all the questions. So what's next for the markets? Maybe we can spend 1 minute to look at Nvidia, 1 minute to look at Sensex, the India index. Then we call it a day. And we have the next one. Let me see, when's the next one. Let me see. Month end will be good. Probably 28th, because there's only 29, 32 2 days left to the month to close. So maybe 28 will be nice. 28 Sunday, same time. 9:30 a.m. UTC time. Yeah, 28 seems like nice, because if it's 4th, then you sort of lose quite a few trading days already. Yeah, it's 28. You sort of you have 3 days that is not factored into the monthly candle yet, but I think it's good enough. Well, probably 28 rather than 4th. Okay, July. Yeah, probably 28 July. That'll be the next one. Okay, let's have a quick look at the Nvidia, because it's like so hot. Let's okay. So when you go into a sort of like parabolic state, so how do you even decide when to sell? I'm definitely not buying. Okay, so you can have you can see all these very nice lines which shows how it's moving. All these are called fan lines. So typically what will happen is, if price lose, let's say this line, it went up to like $135. So you lose this line to, let's say, $90, then you might see a lot of a selling pressure down. But still, it's very hard to short, because in a strong bull, the earlier short signals might turn out to be false. So, so it's, and you look at the parabolic approach, price goes this way, then go this way, basically goes on the parabolic curve. That's also another way to look at when to sell. And look here is starting to go up before touching the line. So what you can do is you look at the weekly plot. Yeah, there's no question about to me, there's no question about whether to buy or sell. Definitely don't buy. You're not in the right from all the way up. I don't know, from $4 here. or even earlier, like 50 cents, right? You're not in the right, or $4, $16, all the way $90. It doesn't make sense to go and buy now. Seriously. There's a lot of profitable position in the market waiting to cash out to you if you want to buy. So here you can draw this line. So yeah, maybe when this line is lost, because it's sort of like hit a parabolic growth already, right? So maybe if this line is lost, that's where you can take profit. And let's say it forms a support and start to go up, then you can start to erase this line. And when this line is lost, you can sort of take profit. As I say, bounce, then maybe go this way. Then again, you draw the most steepest line, and when it's lost, you cash out. But sometimes, not sometimes, quite often, is in such a situation when you lost the line, it might go up to test that line again, and you can go up quite a lot. Yeah. But if you sell here, you won't make that last leg. But you don't sell, you can drop a lot suddenly, So it's really hard to predict. Yeah. But I think it's fair to sell when the line is lost, because not all the time you'll hit that second attack on that line again. Okay. I know we are exceeding. Maybe we look at Sensex. I think, in my view, Sensex, the India stock index, I think you're top this year. I don't know whether I'm overly bearish. But this is my view of Sensex, the long-term plot of the 30 years, 20, 30 years. So you have a breakout of this long-term resistance. Then you have price sort of consolidating very nicely. But that's where's the problem, in my view. If it's a clearly strongly bullish situation, you that's probably too long to consolidate. And then you have a strong up now. So you might go up and then to lose and have a big drop. It might happen, it might not. But of course, I won't start to buy in their stock now. I mean, it had gone up from 25,000 to 75,000. I also won't short it now. But if this line is lost somewhere here, if it loses 69,000, let's say, on the monthly close, I think that's probably a reasonable point to sort of to short, yeah, or even exit the long positions. It is really doing very well, but not saying it cannot go up more in the long term, but I'm just saying maybe for the years ahead, I think there's a more tendency for the top to be formed sometime this year for sort of maybe a year long or multi-year long correction for the upwards attack again. Yeah. Okay, that's all for today. Let me see any other questions. If not, we'll wrap it up. And the next one, we'll do it on the 28th July. All right, we cover all questions. There's only one question from Zayed today. Okay, that's it for the day. I'll wrap it up now.